All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Exciting to see a market that, not the same thing as what we have been seeing here. And, it's a market where there's some potential change out there. And, I titled this video, Signs of Cracking or Buy the Dip. And, to me, that's that's the question here. And, the market's giving us some interesting clues. We talked about this 27.75 level, this reaction low from the Fed, that if that level breaks, the chances of something going on are much greater, right? And, the chances of some selling, really coming in are far greater if that happens. And we're seeing that happen. Now, I don't believe that just because we break that level, okay, the market's now the bears, to be had. But we are seeing that level break. And so what's going on in the market with that level breaking? Is there anything, that we can look at that we can kind of, derive some clues as far as, buying this dip, or, is this something before a long way lower? And so let's go take a look at some of the stuff out there. Whenever we get a breakdown, right? Whenever we get a breakdown, one of the first things that happens, and this can whipsaw, but one of the first things that happens is that the number of stocks trading above the 7-day moving averages drops, and it drops substantially. Now, this number has dropped. It's at 349, so about 70% of the S&P is still above the 7-day moving average, but it's also about 20% lower than what it was earlier this week when we talked about it being at just an extraordinary high. So we're seeing a large number of stocks breaking below the 7-day moving average, but generally, if we're talking about the bears taking control, this number dips under 200. That's one of the common signs that we will see is, the number of stocks trading above the 7, boom, that goes under 200. And you'll notice we're nowhere near that. We're just absolutely nowhere near that. Another thing that we tend to see is transports break down below the 7-day moving average. We're not seeing that. We tend to see small caps break below the 7-day moving average. We're not seeing that. Right. So some of the real big tendencies that we see when a overall market is going to break down, we're not having, at least yet. Right. It doesn't mean they're not going to happen, but they're not happening at this moment to where you can say, oh man, okay, boom, market's broken, go. For the downside. Now, are these interesting stall levels? Are these interesting, pullback levels? Yeah, and whenever they're kind of shallow, they tend to kind of be more indicative of correction when they're consolidation. Whenever the move down is sharper, it's more indicative of further selling to come. But overall, there's just not, we're not seeing those things that break down, breaking down in a big way here, at least just yet. Okay. Now, we are seeing some individual names that are getting some breakdown action in them. Johnson & Johnson, right? In fact, let's go do this. Let's go and bring up a scan. I'm going to bring up a scan. It's going to show the number of stocks that gap down below their 7-day moving average here this morning. And I ran this scan about 10 minutes after the market opened. It was really interesting. And let me show you kind of what it looks like here. But there's 237 stocks here, that gapped below the 7-day moving average. And in fact, let's just go and take this down to S&P 500 names, just to keep it a little consistent there. So we'll rescan that. And so you can see 50. So 10% of the S&P 500 gap below the 7-day moving average. And here you can see the names. There's some pretty big names on here, right? Oracle, Nike, Pfizer, Cabot Oil and Gas. And look, you'll notice it's all different sectors and industries, right? There's not a overwhelming sector here. This is, kind of across the board. But, let's go take a look at some of these that are, at least semi-breaking down. Here's Microsoft. Well, it gapped to below its 7-day moving average, and what's it done ever since the open? It's been bought, right? It's just been bought up. Okay, huh. That's not exactly breakdown sign. What about Nike? I mean, Nike gapped down $1 here this morning. Okay, it really hasn't sold off anymore, but definitely breaking below that 7-day moving average, right? Let's go with a Procter & Gamble and Johnson & Johnson, right? P&G here. Gap down below the 7, not exactly a bearish move, right? Johnson & Johnson, gaps below the 7. Yeah, some potential bearish move here, right? So if we were to go through this entire list, we're going to see that same thing. There are a few that are kind of gapping below the 7 and showing, it's a little bit of breakdown potential, but the majority are like Microsoft or Starbucks, where, yeah, they gap down, but they're not getting sold off aggressively overall. One of the areas that's getting sold off are some of these higher, tech names, the Amazons of the world, the Netflixes of the world. They're getting sold off to a greater degree, but they're not breaking key levels that you go, oh, boom, yeah, this is a big sell-off. So, yes, are there some signs of cracking coming into the market? There certainly are, right? There certainly are some signs of cracking, but are the bears taking any control here? No. They're not, at least so far, taking any control. So far, the data, the evidence suggests buy the dip. Now, I'm not going to buy the dip here. My bias is, well, you know my bias. I don't need to restate it. But can I argue with somebody who wants to buy Netflix right here? I can't. I can't make a good argument against it. Can I argue with someone who wants to buy a Microsoft here, gap down, and then moves above the 7-hour moving average fairly quickly? Can't argue against it, right? Even IBM, which is up near a resistance area, can I argue kind of buying it? No, I can't, right? And on a lot of stuff that I'm looking for some breakdown, I don't exactly have a breakdown happening. Now, one exception is Capital One. And, I looked at these options before I got on video, and the option spreads, they're just too high right now, for me to make this trade, right here. But here's the hourly. Gapped up to the upper band on the hourly, has sold off since the open, and, very similar action to what we see on the daily with the upper band and that we talked about yesterday coming into play. So, definitely have some bearish action emerging there. You take a look at a Visa or a MasterCard, they're breaking below their 7-day moving averages. So, this is one of those sectors that does have that, price action coming into play. But it's a minority sector. It's not, what we're seeing in the majority of sectors out there, at least so far, right? So, from a bearish standpoint, yeah, do I get tempted to dip my toe in here and there? Yeah, because of some of the levels that are breaking and, some of the data and everything. Sure. Is it an all clear sign or, the high probability breakdown here just yet? No, the metrics actually kind of suggest it's a little more of a buy the dip. There's plenty of differentiation going on out there. I mean, you can just look at my board and you see plenty of green in there. If we come and just look at the S&P 500 here so far this morning, let me pull it up. You can see we're talking about 339 decliners versus 160 advancers, right? So there's plenty of advancers out there, going on in this market, and even some of the stocks that I've been looking at for potential breakdown and wanting to short, right? Well, they're going the other way. Right, they're not giving short signals; they're actually going the other way. Now, deer on some news, but you go when you look at an AMD, right? It's not breaking down. It's it's up 10 cents, kind of stuck at this 24. But, just because the market is selling off doesn't mean it's breaking on down here. Even on American Airlines, this morning, it's up fractionally. It's pulling on back here a little bit, but, still up fractionally and not breaking that 35 level. So for the most part, some of the stocks I'm the most bearish on and would like to play to the downside. FedEx, for example, I'm not getting a trigger, right? So, combine that with the metrics not really moving, doesn't make a bear feel all that comfy about stepping in here, just yet. But again, we're early. We're only an hour into the market today. Obviously, things could change. We do have the Fed from yesterday, which, that can be a pivot point. We have some sour-ish economic data here today. Now, the PMI number here in the U.S. was actually fairly strong. It's one that you look at and you go, wow, that's a pretty decent number. Let me pull it up here for you. But you can see it came in at 55.8 versus a consensus 54.4 versus prior month of 54.5. So improving and showing expansion. That's bullish. The concern is, though, the manufacturing. Manufacturing kind of did what Europe did. It ticked down, and the gains are being led by services, right? So, it's kind of that, that same story that we saw, only it's a little bit better, right? Just the net number or the gross number here is just better, than some of the softness we saw, taking grip in Europe and Japan, with those. Now, we did get some housing data, here that missed expectations. The existing home sales, missed expectations, but, housing data has driven the market, it hasn't driven the market in, 10 years now? But you can see here of late, mortgage rates ticking on down, but existing home sales, you can see the fall off that's happening. We see a major fall off over the last year in the number of existing homes sold. And this is a multi-year low type of number, here with this. Now, new home sales, they've still been okay, but, the existing home sales continue to drop off in a I don't want to say overly significant way, but in a substantial way. One piece of data I didn't mention this morning was the Philly Fed Outlook survey. And it came in negative, and this is for the Philadelphia Fed region, and we've seen this happening in all of the Fed numbers, regional Fed numbers, but you can see it came in negative, and this is the first time in many years that, 3 years that it's come in negative here on the Philly Fed survey. So, continued erosion there with it, and something that definitely is in the back of the market's mind. But right now the market's looking at the economic story from with some rose-colored glasses, and rightfully so. But there's enough of an erosion in here that we can see that picture change, and change fairly abruptly as we go forward. All right. So anyway, that's kind of a quick look at the market here this morning, and kind of what we're seeing out there. It's not full-on mass breakdown. It's not full-on just panic sell type element that suggests big selling to come here in the future. It's a very kind of just ordinary pullback, and one that's not changing the metrics, at least so far. Now, that obviously could change, and if it does change, I will definitely look to take advantage. But where I look at, the things I've kind of priced in, I've hinted at a few of them, here this morning. I don't think I'm in a bad position to wait just a little bit more to see if they turn a little bit here today. But, the majority, I just don't have a signal here, just yet with them. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.